Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex language of business and finance to uncover the real story hiding in plain sight, and boy oh boy, do we have a story for you today as Vivakor Incorporated is making some very interesting moves. Before we dive in, if you love getting the straight scoop on corporate documents and want to stay ahead of the curve, make sure you are subscribed. Also, we have a fantastic Discord community linked in the description below where we break down these filings together. Alright, so Vivakor Incorporated has filed an 8K report, which is essentially a way for companies to announce major events that shareholders should know about as soon as possible. Think of it as a public bulletin board for really important company news. They filed this on the 23rd of October 2025, and so we are going to unpack what they announced and what it means for the company's future. The first big item on the agenda is something called a commodity intermediation facility, or an intermediation agreement as they call it. Now this sounds a bit complicated, but let's break it down. Vivakor's wholly owned subsidiary Vivakor Supply and Trading LLC is partnering with a single non-affiliated wholesaler. This wholesaler is going to provide credit support for Vivakor's commodity trading activities. What does that mean in plain English? Well, it means this wholesaler is essentially backing Vivakor up financially. They are going to offer credit support up to a whopping $40 million. Think of it like a financial safety net or a line of credit specifically for buying and selling commodities. This is a significant amount and shows Vivakor is looking to expand its trading operations and needs robust financial backing to do so. This partnership will help them secure better deals and manage risk in the volatile commodity markets. Now, this is the actual agreement itself. It is how they will manage the commodity trading. It lays out the rules for how this $40 million support will work. It is important to note that this description is just a summary and the full details are in an exhibit filed with the report. Next up, we have a settlement agreement. This is a legal agreement to resolve a dispute. Vivakor entered into this settlement with a gentleman named James Samuelson. It appears Mr. Samuelson was claiming he was not paid for work performed for Vivakor. This claim had actually led to a lawsuit. Vivakor has agreed to pay Mr. Samuelson a total of $100,000 by the 30th of January 2026, but that is not all. They are also issuing him shares of the company's common stock. This is a multi-stage payout of stock in late October and November, totaling a considerable $1,450,000 worth of shares. The shares will be issued under their existing equity incentive plan and will be registered. The price they are using for these shares is set at a 20% discount to the average of the lowest 5 volume weighted average prices over the prior 15 trading days before each issuance. This is a common way to issue stock in settlements, but it is good to note they are giving a discount. Mr. Samuelson also has to follow a leak-out agreement which limits how much stock he can sell at any given time to prevent flooding the market and driving the price down. The court overseeing the lawsuit will keep jurisdiction until the settlement is fully paid. This settlement resolves a legal issue and avoids a potentially costly and time-consuming trial. Vivakor also issued a press release on the 23rd of October announcing the closure of this commodity intermediation agreement. This is a standard disclosure to make sure everyone has the same information at the same time, which is what Regulation FD is all about. It prevents selective disclosure of important news. The press release is part of this filing and gives more details about that commodity deal we talked about. This section just lists out all the supporting documents for the report, starting with the agreements we discussed. It also includes the press release and, importantly, the cover page interactive data file, which is formatted for electronic filing. And finally, we have the signatures which show that the company's leadership is certifying the accuracy of this report. James Ballingy, the chairman, president, and CEO, has signed off on this document. Now let's step back and look at the bigger picture here. Vivakor is clearly making moves to bolster its trading capabilities with that substantial $40 million commodity intermediation facility. This signals a commitment to growth in that area and a need for strong financial backing. Resolving the lawsuit with James Samuelson is also a positive step. While the cash settlement is manageable, the substantial stock issuance could put some downward pressure on the stock price if not managed carefully by Mr. Samuelson. The 20% discount on shares is a significant concession, but also a way to ensure the settlement is attractive to both parties. Looking ahead, Vivakor seems to be focusing on expanding its commodity trading operations and cleaning up its legal past. The strength of their future direction will depend on how effectively they can leverage that new credit facility and manage the share issuance from the settlement. The key risks here are the volatility of commodity markets and the potential impact of Mr. Samuelson's stock sales. However, by securing that significant credit support, they are positioning themselves to potentially profit from market opportunities. Overall, Vivakor is showing ambition with this commodity deal and pragmatism with the settlement. It is a company actively navigating its landscape to drive growth. Alright, that is our breakdown of Vivakor's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.